Do you feel a little lost when it comes to investing your money? Don't know where to start? Don't worry, because today we're going to talk about investments for beginners. If you're new to investing and want to learn more about how to start building your wealth, stay here with me. Welcome to the Small Big Investor channel. In this video and others to come, I will guide you step by step so that you can start investing with confidence and make the most of your money. So feel free to grab a cup of coffee, tea, or whatever you like and join us on this journey towards financial freedom. Why invest? Before getting into the details of how to invest, let's first talk about why investing is important. When you invest your money, you are essentially putting it to work for you. Instead of just leaving your money in a savings account where it doesn't earn much in terms of returns, you can invest it in a way that has the potential to generate greater returns in the long term. Of course, investing involves a certain level of risk, and there is no guarantee that you will receive a return on your investment, at least in the short term. But if you are willing to take on a bit of risk, investing can be a powerful way to grow your wealth in the long term. Returning to the point of why invest? Good question. There are many reasons why investing can be a good idea, but here are some of the main ones. 1. Generate passive income. One of the main reasons why many people decide to invest is to generate passive income. This means investing their money in products that give them a periodic return, such as interest or dividends, without having to put in much effort. This can be a good option to supplement your income and help you achieve your financial goals in the long term. 2. Take advantage of compound interest. Compound interest is the phenomenon by which the interest generated by an investment is reinvested and in turn generates more interest. This means that as your money grows, it starts generating more and more money for you. Investing at an early age can be especially beneficial because it gives you more time to take advantage of compound interest. 3. Protect your money from inflation. Inflation is the general increase in the prices of goods and services. This means that your money can lose value over time if you don't invest it. Some investment products, such as index funds or ETFs, can protect your money from inflation by giving you a return that exceeds the rate of that inflation. 4. Diversify your portfolio. Diversifying your portfolio means investing in a variety of financial products, such as stocks, bonds, real estate, etc. This can help you reduce the risk of your investment by not putting all your eggs in one basket. By diversifying your portfolio, if one of your investment products doesn't perform as well, others can offset those losses and keep your portfolio balanced or in gains. 5. Achieve your financial goals. Finally, one of the most important reasons why investing can be a good idea is because it helps you achieve your financial goals in the long term. Whether you want to retire at 65, buy a house, or simply save for an emergency, investing can help you get there. Where to invest your money? Now that you know why investing can be a good idea, it's time to decide where to invest your money. There are many different places where you can invest your money, and the right option for you will depend on your financial goals, risk tolerance, and other factors. Some common investments are stocks, bonds, mutual funds, and exchange-traded funds, ETFs. Each of these types of investments has its own risks and rewards, and it's important to understand the differences before choosing where to invest. Let's define a little bit of all these concepts. 1. Stocks. Stocks are one of the most well-known investment options. It's a piece of ownership in a company, so when you buy stocks of a company, you are acquiring a small part of it. Stocks can be very volatile, i.e., they can go up or down quickly in the short term, but they can also offer high returns in the long term. 2. Bonds. Bonds are a type of debt that governments or companies issue to finance their projects. When you buy a bond, you are lending money to these issuers in exchange for interest. Bonds are generally less volatile than stocks, but they also tend to offer lower returns. 3. Mutual funds. Mutual funds are an investment type where the money of several investors is combined and invested in a variety of financial products, such as stocks, bonds, etc. Mutual funds are managed by a professional and can be a good option for investors who don't have time or knowledge to choose their investments individually. 4. Index funds. Index funds are a type of mutual fund that are based on a market index, such as the S&P 500. This means they invest in a basket of stocks that represent a broad portion of the market. Index funds tend to have lower fees than other mutual funds and can be a good option for investors looking for broad market exposure without having to choose individual investments. 5. ETFs. ETFs are like index funds, but they are traded on an exchange like stocks. This means you can buy and sell ETFs during the day, just like any other stock. ETFs also tend to have lower fees than other types of mutual funds and can be a good option for investors looking for broad market exposure. 6. Real estate. Real estate investment can include buying properties to rent, buying land to develop, or even buying a house to live in. Real estate investment can be very rewarding, but it can also be very risky and require a lot of knowledge and resources. How to invest your money? Now that you understand why investing is important and have an idea of some of the different types of investments available, let's talk about how to actually start investing. One option is to open an account with a broker, which is an account that allows you to buy and sell investments online. There are many different brokers to choose from, and it's important to compare fees/commissions and features before deciding which one is right for you. For example, we have Trade Republic or Scalable Capital as brokers you might consider using. In the following videos, we will dive deep on those. Another option is to invest through a financial advisor or wealth management firm. These professionals can help you create a customized investment plan based on your financial goals and risk tolerance, and can manage the investment on your behalf. Whichever path you choose, it's important to do your research and investigate the investments you're considering before putting your money into them. In this channel, I will advise you to make the best decisions. In the next videos, I will show specific platforms where you can invest in those financial products that I have mentioned before and that I recommend. Conclusion. We have covered a lot of information in this video, but don't worry if it all seems a bit overwhelming. Investing can be a complex topic, but the more you learn and practice, the more comfortable you will feel. The most important thing is to start. Even if you can only invest a small amount of money at first, every little bit counts and can add up in the long run. Thank you for watching the video, and I hope you found it useful. If you did, we would appreciate a like and a subscription so you can stay informed of upcoming videos. And finally, if you have any questions or want to learn more about investing, don't hesitate to leave a comment below. Greetings.